Good morning. Welcome to Stock Market. Today it's Thursday, October 15th, 2020, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Head over to Twitter. You'll find me there at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas to consider upon further research. Hit your inbox every trading day before the market opens. So U.S. equities lower in Wednesday's trading after snapping a 4-day winning streak in the prior session. Discretionary comm services were your laggards. Industrials, materials, two we like. Energy, one we don't, were the only gainers on the day. Treasuries were little changed. The dollar was weaker against the yen, flat against the euro. Gold was up 70 basis points. WTI crude up 2.1%. On the day. Now, as we get to the desk this morning, futures are under pressure here. S&P futures down about 1%. NASDAQ futures down a little bit more. That's after Asian markets were mostly lower overnight, led by Hong Kong. Hong Kong down 2%. More than 2% last night. European markets under pressure here with the major bourses down over 2% as well. Treasuries are unchanged to firmer with some curve flattening. So a little bit of a bid to the back end of the curve after coming under pressure. We're going to take a look at TLT a little bit later on in the show. Dollar is stronger on the major crosses, but still in that choppy range, and we're watching the dollar closely. Gold is down 40 basis points. WTI crude is off 2.3%. Let's dig in now. On a Thursday morning. We're stalling action for a second day, but holding the breakout levels across the board, right? And that's important. So for SPY, you're watching 340, quite frankly. Above 340, let's just call it chop. Let's just call it churn. Let's just say above 340, the odds are we're going to go to the highs and beyond. We break below 340, then you have to start thinking about becoming a little bit more defensive and then eyeing up that 320 level, right? Pretty simple roadmap, right? The market, if we pull back, the market shouldn't get to be 340 on SPY, and that's when you start thinking about what you're going to do. Okay, today what you're going to do at 340. You're probably going to get defensive. Now, by our work, all three of the major market ETFs are overbought in the short term. Our short-term overbought, oversold indicator, they are all overbought in the short term. So that calls for a less aggressive approach to long ideas, in my opinion. The ideal situation is for all of these to hold above the key breakout levels: 340 for SPY, 280 for Qs, 160 for IWM, and then become oversold. And then you say to yourself, okay, we're above support. The trend is still up. Now we're oversold. Let's buy stocks. And then you start to go through your process of identifying the strongest areas of the market, the strongest stocks within those areas, right? Use the major ETFs to set your framework. Let them be your guide. And then from there, you know what to do. So that's what I'm watching here. You're going to see a lot of headlines about stimulus. You're going to see a lot of headlines about COVID. Honestly, COVID, obviously an issue, some chatter in Europe. To me, one of the biggest issues is the crackdown or potential crackdown on the big tech stocks. Read about what's happening in Europe. Some other countries jumping on board with the EU there. So pay attention to that closely. Let's hit our market in a minute. Stock stall for a second day. Headlines continue to drive the near-term. Stimulus and COVID are going to be in focus. There's no two ways about it. Now, you know how I feel about stimulus. For me, pre-election stimulus was never the base case. It was always the upside kicker. So the fact that we're not likely to see stimulus before the election, that's what I was expecting. So that doesn't change my view, right? If you came to me and said, hey, Dan, but we're not going to get stimulus ahead of the election, I wouldn't care. My view is that we're going to get stimulus down the line, right? I'd start caring if we get past inauguration day and there's no chatter of stimulus. That would bother me to no end. The COVID focus, obviously, we want to pay attention to. Breadth metrics paint a bullish picture for the trend, bigger picture trend, but we're not chasing here with the funds overbought, right? We talked about that. Futures point to a lower open today, as I said. Major indices now, power bars, the Dow remains a dead heat, 5-5 after losing 56 bips yesterday. S&P 500 down 60 basis points, still bullish, 136-71. NASDAQ underperformer on the day, 34-6 bulls to bears there. Small caps also an underperformer, 740-261 bulls to bears in that camp. Bonds flight to safety, uptick, send yields lower, and we're seeing some bid to the bonds today as well. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major indexes are mixed. Stocks of the day now. Screening, sticking with this theme because the feedback that I get on this has been spectacular. So I want to keep bringing these ideas to you. What I'm looking at today is with the fact that the markets are overbought, we want to take our foot off the gas, obviously, as I mentioned earlier. We're also coming into earnings season, as we've discussed. So what I'm looking at here are Russell 3000 stocks with a very bearish or bearish rating. And then I'm drilling down to the factors a bit again. I'm looking at what are the estimate trends? What are analysts been doing with their estimates? I'm looking for stocks that are seeing bearish estimate trends, right? Cutting numbers. At the same time, I'm also looking for the stocks that are just lower quality when it comes to earnings consistency, right? There's nothing investors hate more than companies that miss expectations, right? Missing expectations is bad. Okay? Institutional investors will point to management and say, you have no credibility if you can't hit the numbers that you've put out there for the street. Right? So earnings consistency becomes important. So I'm looking for stocks that have bearish earnings consistency. These are low quality stocks, right? They're low quality stocks with management teams that may be out of touch with reality or just don't know how to set expectations. And setting expectations is a huge part of the game, especially if you put numbers out there and the analysts incorporate those numbers into their models and then you miss the numbers, you have no credibility as a management team. So these are companies that shape up that way. Price level is overbought. Now, that's how investors interpret it, right? The credibility standpoint. Investors say to themselves, why should I believe these guys? They clearly don't even know their own business. And then from there, we're looking for the technicals, stocks that are overbought and where relative strength is weak. And I'm keeping it to mid and large cap in the event that anybody wants to kind of play these to the short side. More liquidity in the options for bigger stocks. So here are 42 names to look at where if you own these stocks, you have to ask yourself, why do I own these? Maybe they should be a source of funds, right? Especially if we get down to the 3,400 level on the S&P and it looks like it's going to break, right? Take your weakest names and shoot them first. If you own any of these, they're candidates. And I'll tell you what, given the overbought condition here, if you're looking to play the short side, look for put options, these might be candidates. 42 names. Take a screenshot of this. Come back to the show at a later date. But I think that if you're playing that way, or if you own any of these stocks, I think you need to be sitting up and paying attention here very closely. That is our screener for Thursday. Let's hit our sector tracker now. Moving to the last 5 days for the major sectors. Tech still at the top of the list. Comp still at the top of the list. We like to see that. Staples and discretionary. So consumer winning on both sides, staples and discretionary. I'm not going to read too much into it, but we'll obviously pay attention to near-term strength in staples. Also utilities. If you read my note today, I call out XLU. I've called it out here on the show, but it's intriguing to me that utilities are showing improving relative strength. Now, I don't know what I'm trying to figure out here in the middle of the road is that defensive rotation on the part of equity investors? Do they sniff something out? Hard for me to say that, especially when we look at some of the breadth metrics that we're going to look at later. Or is it fixed income investors that are willing to take on a little bit more risk to get that extra yield because yields in the fixed income market are so paltry? I don't know the answer, right? We'll get our answer. The market will give us the answer, right? If we break 3,400 to the downside and utilities keep outperforming, we'll start to get our answer. If we go down and test 3,200 and then that breaks and utilities are still outperforming, you know your answer. At that point, you better be full on defensive. Game plan. How are you thinking about the market today? Because when we get to 3,200, you shouldn't be making decisions. You should just be acting because you know what you're going to do already. Financials and real estate at the bottom of the list, lower over the past 5 days. Our industry in focus is another laugher, oil and gas exploration, production, and services. All right, this is the E&P names. And there is, again, no shortage of people calling the bottom in energy. And maybe these people are going to prove to be really smart, but that's not my game. This group has been an underperformer for the past 6 months, lagging the S&P by 30%. Ratio is bearish, 9 bears to 5 bulls, and currently ranked number 18 of 21 subsectors. So the names you want to avoid: Valero, Amerada Hess, or Hess Corp. It used to be Amerada Hess, and Phillips 66, PSX, all with bearish or very bearish Chaikin power gauge ratings. I think Valero was a name on this screen as well. Hi there, Valero. Take a look at that name for the time being, but certainly one to avoid. Take a look at that chart. All right. Do you want to buy that chart? I don't. I don't want to buy it. I'll buy this chart going through 60. How about that? I'm willing to give up the first 16 points. You heard me right. I'd buy this chart going through 60 or whatever this level here is, right? Slightly under 60. That to me would give me confidence that we have a turn. I'd also want to see a relative strength improving, right? Until then, you can have the bottom. Your bottom callers, you can have it, right? They'll look like geniuses if it does plan out. Me, I come at it from the trend perspective, and I want to have some confidence that a trend is developing to the upside. So I'm going to stick to my knitting. Anyway, let's get to what's trending now. Yesterday's movers and shakers. Speaking of energy, Concho higher on talks that Conoco might make a bid. Holly Frontier, HFC goes along for the ride. Maybe M&A chatter in the space. Lends a little bit of a bid to the group yesterday. Stretch. Newell, no real nose there to send that stock higher by 3%. SYY, same thing. KMI caught an upgrade at Goldman Sachs to send that stock higher by 2.8% on the day. It is bearish here at Chaikin Analytics. Loser side of the board. Now, I had been looking for the banks. I've been watching the banks, right? To me, the relative trend to the downside, showing signs of stalling out in financials, was more intriguing to me. So I was paying close attention to the banks. Not saying I was getting bullish on them. I was watching to see if they were going to be a catalyst for a change of trend. So far, after the first 2 days of bank earnings, not so much. Wells Fargo down 6%, Bank America down 5% following their earnings announcements. Illumina has had a nice snapback rally and then rolled over yesterday. T-Mobile down 4%. Some chatter, some people attributing that to the fact that they, as well as AT&T, ticker symbol T, got no mention at Apple's event unveiling the new phone. Again, maybe a stretch, maybe I don't know. Reading too much into it, I don't know. But that's what I'm hearing in my work. NC down 3.8%. Nothing company specific to drive that one. Let's hit the charts now. Breath still healthy. Percentage of stocks above their 200-day moving average, 72%. 50-day moving average, 70%. AD line made a new all-time high on Monday. So Breath, from a trend perspective, still very much intact, okay? What I'm concerned with is the near-term overbought condition, right? So that's what I'm really paying close attention to here in the near term. I'm concerned that we're just overbought, right? Stalling. It's become less aggressive. The trend is still there, confirmed by breadth dynamics. Let's take a look now. I told you we would take a look at the long end of the curve. So if they're going to go, this is it, right? Take a look at what happened here, right? You had the first, flight to safety, right? Then near-term volatility around coronavirus, and then just kind of a spike, and then a steady state. That steady state has allowed the 200-day moving average to now catch up, right? Sideways, right? So was this a correction through time for treasuries? Perhaps it was. For the long end of the curve, maybe this was a correction through time. The 200-day moving average has now caught up, and we can bounce. Now, if that is the case, I'm going to need to see RSI move out of this bearish range, right? And then that would have to, I've been saying shorten duration, right? That stagflation theme calls for owning shorter duration rather than long duration if you're going to own treasuries. So I've been in the shorter duration camp, but I'm going to have to sit up and take notice and read the message of the market if that is in fact the case. So the next thing I'll be looking for, obviously, if you want to get bullish on the long-term treasuries for more than just a trade, right? For more than just I bought it at 159 and I'm selling it at 162. I'm talking from a trend perspective. If you want to get bullish, we're gonna have to take out the 50-day and we're gonna have to see the RSI shift into bullish ranges. We're not there yet. And again, all eyes will be on the buck. I'm just kind of keeping it here. What's interesting to me is we're back in the range, right? So, to me, the bears get the benefit of the doubt on the dollar until proven otherwise. So I'm just going to continue to watch that one closely. That's it. Take us for a test drive. ChaikinAnalytics.com/test drive. I'm with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.